All right, good morning, everyone. Let's keep going. Okay. Last night, another relatively solid session out of U.S. markets. We've, like I said before, I think we've caught most of the market short with everything from Greece to China and in between. Not necessarily just short, but underweight as well. A survey from Bank of America came out yesterday, and of 100 and however many asset managers that take their survey with a combined, just short of $1 trillion under management have the highest the highest amount of assets in cash that they've had since December 2008, which is like 5.5%. Very, very normal bull bear indicator. Cash above 4.5%. Contrarian trade is to be bullish of the market. Cash under 3.5% or 3%. Contrarian trade to be short of the market. So that's that's where we were. We were under positioned. I know there's a lot of the amounts of puts that have been bought across the board were also through the roof. Record numbers over the next 2 months or 3 months or something like that. So that sort of thing happens. Usually the herd doesn't exactly get it right, and so that's why I think we've seen such a snapback, and we've continued to see us grind higher. And to be honest, it doesn't feel like we've seen capitulation yet to the upside. So I think there's still some shorts to be squeezed out. This probably could maintain itself for a little bit longer. A couple of things happened yesterday. Retail sales missed pretty badly by about 0.5%. There was a couple of things that potentially could have contributed to that, but the bottom line is a really, really bad number, and I think that we didn't see a real reaction out of treasuries, but the last couple data points have been mediocre at best, and so that's maybe going to give them enough ammo to stay the course and not raise rates in the next couple of meetings. Even though we had Janet Yellen that came out, said it will be appropriate on the weekend, said it will be appropriate to raise rates before the end of the year. You also had one of the biggest doves that caved yesterday as well, saying that he thinks that any meeting is in play now, and obviously conditions have to suit, but any meeting's in play. We had Twitter yesterday, fake rumor, the same guy who's made like he's put out 3 fake posts with like a snapshot of what he shows to look like a Bloomberg website saying takeover bid or whatever, and got the market spiking up. I think we spiked up about 7-8%, about 10% at one point. But I think the reason why the market would go with it is because the price that it's trading at the moment and what that asset is probably worth are two different things, and the market is believing that a takeover could easily happen. All right, Asia overnight we had Shanghai back down again. This is 2 days in a row now we're down in Shanghai, and that's even in the face of better than expected GDP numbers. I don't think anyone believes it, so maybe that's part of the problem. But also the bottom line is that we're at a point right now where we're sitting here getting a tremendous amount of support out of the government, in terms of not being able to short sell, or certain people not being able to sell, all kinds of margin lending favorability, asset stabilization programs, and it's still come down 2 days in a row. I think markets would be a little bit nervous. Let's say, for instance, if we saw it sell down, I don't know, another 4 or 5%. When you come in the door tomorrow, markets will start to probably get a little bit nervous of them. We had Australia that traded well overnight. Financials kind of leading the way, and financials around the world have definitely been leading, I would say. So a bit of mixed action across the board in Asia. Moving on to chart of interest, and this just shows you, the capitulation, not capitulation, but the turn in sentiment from Greece and China to, oh shit, everything's going to be okay. You've seen one of the couple largest 3-day drops in the VIX in history, which is a 3-day decline of 33%. Pretty incredible. Anyway, all right, let's look at corporate action. We've got Bank of America, Netflix, and Burberry all out today. We continued to look at the financials yesterday, or a bit of a mixed bag there. We saw JP Morgan better than expected. Wells Fargo was a bit soft, but I think all in all, we'll start to get see a better picture of what earnings season looks like toward maybe middle of next week, and we can start to really see where we're headed in terms of the U.S. economy. All right. Market data today, we had Chinese industrial production better than expected. GDP year on year a little bit better than expected. UK have jobless claims change today. We've got ILO unemployment. We've got MBA mortgage apps in the States locally. We've got retail sales at 1. Keep an eye on that. That could definitely move some of the retailers, and definitely can also move them ahead of some of these trading updates and trading statements that could be coming out in the next 2 weeks. Empire manufacturing in the States, industrial production in the States, and crude oil inventories as well. All right, let's get into the maps. I'm not going to go crazy here and show you too much, simply because we've just, the last couple of days is such erratic trade. Charts are starting to look so choppy back and forth. There's actually not that much that I can find that really looks exciting. This is gold. I'm going to go ahead and draw the line here. I know that we looked at this a few sessions ago. I just want to go back and revisit it. The reason why is because we're really just consolidating right down here on support, and this is major support. I mean, this drops, or when it drops, however, you can't say when it drops, but if it drops, and it's looking likely that it will drop, I think it can really get a bit messy, because we've been consolidating down there for so long. When we go all the way back out to a 5-year here, you can see we've really just imploded down to these sorts of levels, and it just doesn't get any better. There's no there's no turn, there's no change, there's no support for this thing. And then you've got things like the UK coming out yesterday, and they're going to, they're talking about potentially hiking rates. Carney warns of the first rate hike. There, I'll show you that on the back. So that's obviously having negative effects on gold, as well as the states looking to raise rates. And you look at something like this. So this is the pound versus the euro versus the pound, and you can see euro breaking down here against the pound. One really kind of getting into the meat to quantitative easing, the other, getting ready to start pulling in the reins, and we're going to probably see a nice move, to the upside here in the pound against the euro. I think we've got about 4 cents potentially to gain on the breakout that's just happened overnight here. So just keep an eye on that. We do have those UK numbers this morning at about 10:30, and that could really be a catalyst to get this thing really breaking out further. All right. Next one we'll look at is Aspen. Aspen, incredibly disappointing over the last couple sessions. They've still got the trading statement that maybe that's overhanging them, but either way, I think I look at it as a real disappointment that we had a 3,000 point rally, 3,300 point rally from low to high in the Aussie in 3.5 trading days, and you got nothing out of this thing. And in fact, this last this day where we touched the bottoms here at around 347, we closed up at 352 or something, I think. That was only the day that we kind of held. That didn't include any of our real updates. So through the updates, we've gotten almost nothing out of the share. I think that's definitely negative. I think if this thing doesn't get going, we'll probably see another retest of support down here around, call it 347. And anyway, until we break out of this downtrend, I think you got to be a little bit more cautious in Aspen. All right, and the last one I want to look at here is Grindrod. I'm just going back. I mean, this is incredible charts here. This thing was at 29 bucks middle of last year. We're looking at this thing at 12.50. Sorry, it closed at 12.43 last night, and you can really look here. So there's you can throw this somewhere between here, 12 and 12.50. Is where there's support. I'm looking at a 10-year weekly chart here. So this is just a massive pullback. The thing's been absolutely decimated. Any reason for this besides the obvious, and that the Baltic Dry has been hammered and that, Chinese shipping is kind of falling through the floor. But this thing at some point will probably become a decent play for a dead catter at the very least. So just keep an eye on it. It might be worth watching. Might be worth having a nibble around these levels, and something to think about, something that I think the market's not really paying that much attention to at the moment. And that's it for today, guys. Good luck out there.